Welcome. I am Eric with Mother.com with a weekend market analysis for December 24th, 25th, and 26th. We can see on this Friday, markets are a little bit unchanged. We've been all over the place, a little bit higher, a little bit lower. That's where we settle right now. And if we take a look at the cryptos, we can see BTC and Ethereum pretty much for the day, they are unchanged. And for the week, we can see, let's see here, the Dow is actually positive, believe it or not. NASDAQ, of course, is the one that is down. For the week, down about 2% so far. And for the month, NASDAQ's down about 8 to 9%. And we can see the cryptos for the week a little bit higher, if not unchanged. Let's begin here by taking a look at the S&P 500. And I'm pretty confident that a lot of traders are watching this trend line here, the recent price channel, to see whether by the end of the day we are going to be rejected, or if the market can move above this declining price channel line, and see whether we can close a little bit higher. So I'm pretty sure that's an area of interest. Now remember, coming off the lows of the day from yesterday, we had this very clear positive divergence. Again, this is the hourly for the S&P 500. This positive divergence setup was evident and gave this little bit of a pullback off yesterday's lows. And at the same time, the MACDs also gave their own improvement, adding on to the positive divergence on the RSI. Also, we can take the most recent tops of the hourly and combine it with this here. We seem to be forming a short-term wedge on the hourly. And actually, you can even extend this line here this way, because this was a uniform activity above the line back below it. So that was a trap, and we can ignore that. But anyway, if we're going to move higher in the short term or at the beginning of next trading week, we would need to clear this line if the market is going to move beyond the current levels. And again, don't forget, as we began the video here, there's a very clear area here where the market is going to have to decide whether it wants to be above this line, or whether in the short term this line is going to be resistance, and we see ourselves pulling back into the end of the close and maybe at the beginning of next week. Taking a look at the NASDAQ weekly, of course, we are pulling back after we tagged this topside line on the weekly, and over the last 3 weeks we've not been able to move above this line, and now we are coming back to test this line here. And so if we end up breaking below this line, then we are definitely going to be taking out this area here, which, by the way, based on the weekly closing low here, that is also another level to watch. And that level for the NASDAQ is 10,321.39. So as long as the NASDAQ is defending this price, 10,321, we can say that the market ultimately is failing to break down. And this is encouraging that eventually there's going to be a recovery. Now, if the market is unable to hold above this price level here, and we break to the lows here, that's going to be a market due for a substantial sell-off. Now, if we use this current support line, this lows line here on the RSI, and bounce, and if we hold above this price, that's going to be evidence that the next meaningful direction is to the upside. NASDAQ daily, if we go back to the lows right here, we can see that this corresponds with this movement. There was a little bit of a wedge formation here. We move above that range, and the market has kept these lows. We haven't broken those lows yet. Take that area, draw your uniformity line, and it seems to me that the market is doing its best to form a double bottom support on the daily. If this double bottom support holds, again, that's visual evidence that there's a recovery being set up here. If this breaks, then it means that actually there's more downside even day to day. For now, it seems like the market is aware of this area here, which happens to be just under 38.2. And I think if this double bottom is confirmed, it means that day to day, the market is preparing us visually to anticipate the next move to be to the upside. And we can borrow from the Dow daily, because the Dow daily has already formed this look where it came back to test this nice entry here of the lows. Again, there was a wedge. We move out of this area. It's a very strong recovery of the lows there. Of course, the Dow hasn't been back to those levels yet as of now, and it has already come back and tested the same area and held. So if we can borrow from the Dow, it looks like the NASDAQ could also be doing the same thing. And in time, markets are more than likely looking to go higher as long as all of these daily support lines are holding. And the same thing can be said with the S&P 500. We can see that this line here seems to be forming a nice double bottom. If that's the case, then the market is setting the stage to hold this line and for prices eventually to build to the upside. And of course, visually, if we break this area, anticipate that markets are going to be moving lower. The NASDAQ, from a long-term perspective, go back to the lows of late 2002, early 2003. There's this line here, which, by the way, this, in my opinion, can be split in half. Talking about this area right here, right there, something like that. And you can see this is equal distance in time and space on the left side and on the right side. In other words, all of this was uniform action below the line and back above it, which meant that this was a re-entry based on the uniformity principle or concept. And here again, what I'm saying is the NASDAQ could also, as far as the monthly chart is concerned, if it turns positive in the new year, this could be a triple bottom. And of course, a triple bottom is more stable than a double bottom. So let's consider that. Ultimately, if we end up breaking below this line, that's going to be a nasty bear market that bulls are going to have to live through. By the way, if we take a look at the Dow monthly, we can see periods where we had serious bear markets. 02, let's say from 2000 to 2003, somewhere here. Notice where the MACD was trading. It was below zero. Then we had 2008 and 2009. The MACD was below zero again in this phase. Now you'll see over the last couple of, let's say, 11 years or so, the MACD has generally stayed above zero. And over the last couple of months, we're still holding above zero. So we haven't seen, in my opinion, as of right now, we haven't seen a major sell signal. It's going to take the MACD's breaking below this support line to really convince me that there's a true bear market in place. That's one way of looking at it. Another way of looking at it is just to draw a line connecting the prior highs. It should be something like that. And you'll see that we had this breakout here in 2013 that began a fantastic bull market there. And that coincided with a price breakout also to all-time highs. Now we've gone below it and back above it here, 2016 and to early 2017-ish for this re-entry back above the line right there. We recaptured the line there coming off the lows of early 2020, and we can see in late 2022 this line is holding. So as long as this MACD line is holding and until we see evidence to the contrary, we can suspect that ultimately this market is pointing higher. And at the same time, we know again that if we end up breaking this line to the downside, that's a market that is going to be poised for a massive sell-off. Right now, we haven't seen that massive sell-off situation show up. Going back to Apple on the monthly, as I discussed last weekend, we can see a big down month, down about 10-11%. The reason is we are moving below 50 for the month. So if you're bullish on Apple, then you want Apple actually to close below 50 for the month of December, and then for it to have an opportunity of recapturing the level back above 50 to potentially build on a future recovery. Now, if it can hold back above 50 in the months to come, especially with uniform action, then it would be the third time it's held this RSI 50 level. If you take a look at a longer perspective, you can see that if somebody was able to recapture this re-entry in stock price here for Apple over the last, let's call it 20 years or so, if you use the 50 for a re-entry, and sometimes like here it took a while, this could also be another area in the coming years. We're going to see potentially that the stock actually gave a very good buy signal. In fact, even this was uniform activity, took a couple of months below zero, back above it. The re-entry back above zero, back above RSI 50 is a good re-entry right there. So that's one way to look at it. The other way to look at it is if you draw a line connecting RSI lows from 97, you can see the stock is coming back to test this long-term trend line. If you're bullish, you want to see support on the line month to month. And of course, we also know that failure to hold and failure to support this line, a break below this line, is going to take prices lower. Of course, another stock that has seen a massive plunge is Tesla, down almost 37% for the month. Now, what I want to discuss here is, yes, it's down, but we also need to understand that it is coming back to a level month to month that could be a logical bounce area based on the uniformity concept, because month to month, if this holds and it starts bouncing on this line here, which by the way, the line is conveniently around 38.2, then this becomes a logical area for somebody to be looking for an re-entry back into the stock. Now, as traders, as investors, we are an interesting bunch. We fight for the stock here, but we don't care for it when it's being sold off and it is at a discount. So just keep that in mind, that the discounted price nobody wants. And in my opinion, the way you can use this visual is, if this is where it finds support month to month, let's say January, February, March, you find that it is holding this line, then this is where you take a calculated bet that chances are, after a massive sell-off, the next meaningful direction is to the upside, and more than likely it's going to be a slow recovery at best. Reason being that there's a lot of people who own the stock at higher prices, and they are going to be unloading the stock as it comes closer and closer to their purchase price. So just know that even a price recovery is going to be slow, and it's going to take many months, if not years, to take back all this lost ground. I should add here that if the stock eventually breaks below 38.2 on the monthly, whenever it breaks below 38.2-ish, expect there to be another massive plunge. But for now, as we come close to the end of the year, end of the month, I would be looking at this area here, potentially for support. And also, you can draw another line which is connecting the tops, and you can see that the stock is aware of these two lines. And if these two lines hold, then this is where you get a discounted Tesla when nobody wants it, in anticipation for the next multi-month, multi-year move to be to the upside. A quick look at the TSX, we can see that the Canadian market, just like we see with US markets, on the weekly here, we have this initial clearance of this topside line. And I think what's happening here, in my opinion, is we are doing our best to hold this line here. And so I would anticipate with the RSI under 50 here, that if we get an opportunity of moving back above 50, then we start building for a recovery move. And in the short term, if the weekly breaks below this area here, then this is going to attract more selling. We can also say that there's a line here connecting recent RSI lows that needs to hold. Otherwise, if this line is also violated to the downside, then there could be more selling. For now, I'm leaning towards support on both the lines. And again, it's a two simple lines, this line here, and then there's the other line, which is the previous breakout line that is also coming in play. And as I've drawn it, I'll just draw it as such. Those two lines can offer support or a break situation. Taking a look at the Nifty, we can see it's continuing to pull back, and this pullback is not entirely a surprise. Remember, over the last couple of weeks, we had seen that it had come back and was rejected here. And of course, this was also resistance in early 2022. This is the weekly for the Nifty. Right now, we are seeing that price is also below the previous breakout level. So there's a couple of red flags going on here. So we can say this is not looking good for the Nifty. On the monthly also, we've been observing this continued formation of where we had an improvement month to month. We have declining technicals. We have RSI 69.1 rejection. So there's a lot of negative things taking place here. But also, as we come to the end of the month, we can see that it could be coming back to test this line here. And if this line can be used on the monthly as support, then it could stop this recent pullback. On the daily also, the Nifty is coming back to test this area where we have movement off the lows in June, and we can draw our RSI formation right here, draw a line from there, which happens to be just above 30.90. And we can see that this market used this area for a bounce here late September, and we would go on to record fresh highs. So we are back to this area here. Movement back above this support line could stop the recent slide and generate enough energy for a move higher. And if we end up breaking below this line, if we don't get uniform activity support and we start staying below 30.9, then that means that there's more sideways to down market as far as the Nifty is concerned. Sticking with daily charts, we can see the dollar by way of the UUP. We've been staying in this sideways area, and also we have a flattening out 200-day moving average. We have a declining 50-day moving average. And so what this means is we could be getting an inverse more divergent breakout if the dollar cannot hold this price range. And if we end up breaking this level here and drift lower, one would anticipate that that's going to break the dollar even further, and we're going to see a stronger push to the downside. Otherwise, the best way I would explain this situation as being potentially bullish is you'd have to clear the recent daily range, this range here, when the 200-day moving average is flat, you'd have to clear this to the upside so that the flat moving average, which is the 200-day, can start coiling higher, and this would probably lead eventually to a bullish crossover above the 50-day moving average. But for now, there's a possibility that if we break this area on the dollar, so let's say we break this dollar, the dollar bends its 200-day, and this is already dropping the 50, that would be setting the stage for a bearish crossover. If that is to take place, then prices surely are going to be lower than where they are. This is exactly inverse to gold, which makes sense because gold daily has the exact opposite. Look, we have a flattening out 200-day moving average. We have here almost a crossover between the 50 and the 200-day taking place. And to make sure that this takes place is you'd want to see energy moving prices higher. So a day-to-day price breakout is needed above the recent December daily closing highs for GLD, so things can move higher. As I mentioned last weekend also, there's this line here. We break out above the line, and we've been using this line area for support. So as long as this is holding, then we have to anticipate that we continue seeing gold being sideways to eventually moving higher. And of course, if there's going to be a bearish setup, then movement below this range is what you'd look for as a sign that there's actually set up for a down move. If we break this area, which is the lows from November, then this 200-day moving average is going to have to be forced down. So this would force the 200-day moving average down instead of higher, and would end up having a bearish crossover if we break November's daily closing lows. But for now, I'm thinking and leaning towards a market that is setting the stage for a move higher if we can get a price breakout above the recent daily closing high range, which is a daily closing high from this past month of December. Taking a look at crude oil, and I'm going to use USO again. We have this support line that took place a couple weeks ago that's holding, and now we are forming this top side line. So if we're going to see another push higher in crude oil, then this is going to have to move and take out this top side line. So for now, I would say we seem to be stuck in a sideways range. Taking a look at the daily, we can see that there's a range here. If we take the daily closing lows, draw it as such, we had a brief move above the range here and then back to the range, and then recently we had a violation of that range to the downside, and again we recaptured it. So we are back in this sideways base as far as crude oil is concerned. In this type of situation, there's no real direction, so I would say we continue being sideways for now based on this range we've been over the last couple of weeks, if not months, going back to October. On the monthly, we can also draw this line here, and this line gave a good breakout in 2021 here, late 2021, and has been used for support. So we can say net crude oil is still sideways to higher. It's only at the point when we break below this line that we can say that there's another leg down for crude oil. I think it's found a floor for now and could be sideways to higher in the coming months until we violate, let's say until it breaks back below 50 on the monthly RSI. We can say that it continues to be sideways to higher for now. Taking a look at XLE on the monthly, we can see that earlier at some point in this month of December, it was failing on its breakout, but we've recaptured the level back above this area. So the breakout that took place about 3 months ago, above 85-ish, is still intact. So that's still encouraging. What is needed here is a future breakout above the monthly closing high from November. If we can break out above November's closing high, especially after this month, which is going to give us 1 month of rest, any future breakout above 90-ish is going to be a strong indication that there's more upside as far as energy and the energy space is concerned. Now, if you're looking for a reason to suspect lower prices, then movement below this area, which is 85-ish. In other words, a failed breakout from this close would mean that movement below 85 would also be confirming this look here where we have prices improved, but these prices were followed by lower RSI action. That negative divergence could be a problem, but I would say for now, I'm leaning towards an okay market because we recaptured this level here. And so this is encouraging because we are still intact in terms of the breakout. This is good recovery here. Yes, you spend some time here below it, but for now you're back above the breakout level. That's good. Also, if we take a look at this 5-year weekly chart, we can see that it is holding and has held here. And as long as this line is holding, then we can anticipate that in the coming weeks and months, this is making that this move is still intact for sideways to higher. At some point, if we end up violating, when we end up violating this line to the downside, a break of this line would be suggesting to anticipate a strong sell-off. Right now, this support that took place here over the last 2-3 weeks is what the bulls needed to see. Taking a look at BTC, seems like sure we've been stuck in this range. Let's call it 17,000 for a while, about 4 months or so, and we haven't broken below or really confirmed support on this line. So that is still playing out, but ultimately what the bulls want here is coiling back above this line and building up in price. And if you're looking for another sell-off, another leg down in the cryptos, then the more it breaks this line, the more it moves below 38.2 on the monthly. If it moves below 38.2 on the monthly, expect a big price drop in the cryptos. If BTC cracks below 38.2 RSI on the monthly, that would be a major sell signal. For now, we are still stuck in this range. This is the monthly. Taking a look at the weekly, again, you can see we've been stuck here since November. This range, very tight range, and the RSI, yes, has been improving, but really no action to the upside. And don't forget that there's also the other consideration, which is the top side line, which I can do a search. So if BTC is to move higher, I've been saying for weeks, it needs to clear and move above this declining RSI line on the weekly. That's it for this weekend's market analysis video. I do wish you a fantastic Christmas break with your families. I am Eric with Mother.com. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.